Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB. I'm Juliette Sarli. Great to have your company on a day when we are seeing some nice green on the screen. Let's have a look at where the CBO 200 is finishing the day's session on a very positive risk on session, up 1.5%. The S&P ASX 200 up 122 points or 1.4% to 8,619 after setting a new 20-day low. Now, a lot of this optimism, of course, coming from the fact that there is expectation potentially there will finally be an end to the conflict in Iran, or at least some kind of deal reached between the US and Iran. US President Donald Trump saying negotiations are in the final stages. So that did send global markets higher and has helped us have this Thursday turnaround. Jobless jumping though, we did see the unemployment rate spike to 4.5% in the April jobs number. Now that is the highest level since 2021. A lot of the jobs that were lost were in youth and female employment, but it does look like at least this means that the RBA will pause in June. I spoke to Deutsche Bank economist Phil O'Donoghue, who certainly thinks that's the case. AMP still putting a chance of an August rate hike on the cards, given the uncertainty over the Middle East, but pricing for a June hike down from around 20% before the jobless data to now around 8%. And piercing IPO, well, we had a new company hit the boards today, and that was Skin Candy debuting on the ASX, tapping into Australia's booming beauty and body art market. The piercing studio operator opening trading at $2.25 and closing at $2.35 above its IPO price, giving the company a market value of around $245 million. Now, investor demand was strong enough for the float to be upsized to $160 million in the IPO, with existing backers, including private equity firm White Oak Capital, cashing in part of their holdings. Now, founded in Queensland, Skin Candy operates more than 100 piercing studios across Australia and New Zealand, targeting Gen Z and millennial consumers with ear, body and jewellery services. Quick look at some of the sectors on the market. The miners all had a good day, BHP up by about 2.7%. The energy sector, though, heading the other way after that big fall in crude oil prices overnight amid hopes that we will see a deal between the US and Iran. And looking at tech stocks, of course, Nvidia was in focus on Wall Street. Life 360, NextDC having a good day. Tech One coming off. Electro-Optic Systems, meanwhile, completed its acquisition of Mars, the transaction formally bringing the counter-drone technology business into its operations following a deal announced last week. EOS completed a $150 million equity raising to help fund the acquisition.
Mars system is by far the most advanced system in terms of user friendliness, easy to operate, extremely open and modular. We can integrate any kind of effector and sensor into the system, whether it's EOS sensors or effectors or third-party effectors. It's extremely versatile. The clients love it, and we have with that now all the assets in hand to become the world number one in the anti-drone warfare. That was the missing element. Now it's completed.
The missing element complete. Some of the other stocks on our radar, gosh, GYG had a good day, up 13.4%. This was on a broker upgrade to outperform. Zip also there in focus. Now it's maintained the right to continue using the Zip brand in Australia after reaching a settlement with First Mac over a trademark dispute. Zip had been ordered by the courts earlier this month to change its name in Australia, but it's managed to win that battle. Also looking at Telix, reaffirming its full year 2026 revenue guidance, sending its shares up by about 0.6%. Hyperion X had a good session as well, commissioning a 300-ton metallurgy press at its titanium manufacturing campus in Virginia as it targets defence and aerospace demand. And SGH there down by about 0.5% despite reaffirming its full year 26 guidance. Let's get to our guest for the day, Clifford Bennett from PropX24. Cliff, great to see you. A lot of volatility here, and we're waiting to see if there is going to be some kind of a peace deal.
Well, for the Australian market, it's been very much of a yo-yo within the range, hasn't it? We've had 3 or 4 days now of a sort of weekly range every day, with the market responding to various utterings from President Trump and Washington. I think the market still seems surprisingly, shall we say, believing in what President Trump says, because it's often the case that he turns around 180 degrees within 24 or 48 hours. So we have to be a little bit cautious on this idea that negotiations are almost complete, almost over. So I'm still playing the cautious card here because I think it is appropriate. The Iranians are saying that US forces are maneuvering or repositioning for an attack on Iran. This could, of course, just be part of the posturing and the negotiation tactics, etc., and just putting pressure on Iran. Or it could mean that, yes, we are close to that happening. Trump himself said we nearly went back to a major attack and war on Tuesday, but he cancelled because the Gulf states don't want that. The Gulf states don't want it because Iran has said it has weaponry it hasn't even used yet, and it will use that weaponry, and it will take out all oil infrastructure, energy infrastructure in the Gulf states should it be attacked again by the US. Now, that's a scary scenario, and it's not one people should be managing their investment portfolios with total disregard of. That sort of scenario would really see oil at 125 or even higher. And the inflation curve is going to continue. It's a very slow-moving inflation tsunami from these high energy prices because people have been drawing down on the reserves around the world. But already we're seeing demonstrations in riots in Kenya and people losing jobs across Asia, and problems in Sri Lanka are all related to oil supply. And in fact, on the day today in Washington, there are massive demonstrations against the war in Washington itself. So the world is very focused here. President Trump says he wants a deal, and the whole world needs for there to be a deal, and hopefully that will be the case. I think it's worth noting too that oil supply has only been reduced by about 13% at this stage because other sources have increased supply. And so that's helped very much keep prices at the bowser, if you like, low. So if it rarely are we confronted with a situation in financial markets and equity markets where the stakes are so high and they're about to be decided one way or other in the next few days. So I think it's worth just being a little bit, circumspect for a few days. Obviously, individual stocks are there that are going to do well regardless. So if you have an eye on those, that's great. But do be aware that the macro situation may not be as that sort of upbeat sort of communication from Trump was yesterday. He also followed up later in the day threatening a massive attack if there is no deal. So I don't think it's as clear cut as people understandably want to think and believe, but we have to be careful of what we don't want happening actually being a still very likely scenario.
Yeah, absolutely. And as you say, the markets are always reacting to what Donald Trump says, and particularly when we look at what happened in the oil market overnight, but there isn't necessarily a resolution or a solution to the problems just yet.
That's right. And notice too that the oil market started to recover a bit, not as all the way, but certainly stabilized and didn't keep falling. And I keep alluding to the fact that oil traders probably have a closer, eye to what's going on than most markets do because of their experience of dealing with people in the Middle East, and therefore having an avenue of communication that the rest of the world doesn't have. So sometimes the oil price will lead events, and I have noted that over the last couple of weeks, obviously the oil price has been very strong, back to its spike high and a little bit higher, and remained quite firm, except for that sort of 18 hours ago movement in the oil price on what Trump said. And oil is indicating that there is a high risk, if not probable, a high risk of a resumption of hostilities. The Iranians have come out today and said that they won't be surrendering, and they've said that that's a delusion of the US, so that's their point of view being declared publicly. And they've said that they have weapon systems that have so far not been deployed, and they could strike outside of the Middle East. So I don't say that to scare people, but I do say that to sort of stretch people's imagination a little bit, to just be wary that, things could develop very quickly. And again, I'll come back to the point, within the next 3 to 4 days, we are going to know whether things are going to be higher oil prices or lower oil prices, which will have ongoing repercussions around the world, and particularly for Australia. Australia at the long end of a long supply chain is always vulnerable. It's nice that we've been receiving oil from the US, but there are limits to that as well. And I just think we do need to be quite cautious here, particularly after a little bit of a worrisome budget and a little bit of a worrisome unemployment number today.
Yeah, so what does that mean, Cliff? Do you just, stay under the doona? What are you allocating to, if anything?
Well, there's been a lot of rain up here lately, Juliet, so under the doona has been a good spot. I think, you in a way you can hedge your portfolio by being long oil futures or having orders to buy above the market. So if war breaks out and the oil price starts running higher, you're making some profits there to offset. But this might be getting a little bit too sophisticated for many people. I would think it's a little bit more than just hands off the steering wheel at the moment. I wouldn't be jumping in and buying a lot of stocks today. If the market breaks up tomorrow because there is a peace deal, I'm going to be one of the most aggressive bulls and buyers of Australian stocks because they have priced in a worst case scenario to some degree already. So therefore, the Australian market will have more upside than the US market if there is a peace deal. So I'd rather be someone who's ready to act on developments rather than preempt developments. Although, I am setting orders to buy oil just above the market if some breaking news starts to develop in that wrong direction there.
All right, Clifford, always appreciate your insights. Get back under that
Thank
doona.
you very much, Julia.
Thanks so much, Clifford Bennett from PropX24. All right, let's get back to stock specifics. It was an international special on the call. Andrew spoke with Mark Gardner from NBC Markets, Mark Moreland from Value 3. The stock of the day was Nvidia.
Over the last few months, it's done respectively. I think the last month's up about 10%. That's nothing compared to what some of the other companies that have been, done 5x in a month. So it's not beating everything, but it's super safe, reliable. It's a fantastic business. I think they've got, is it 90 billion now invested in other companies? So they've got a very large portfolio of investments, which in things like Anthropic and OpenAI and CoreWeave, they're all going to pay off massively as well. I think Nvidia's future is very bright.
That exponential growth in GPUs, etc. Look, that's great, and I think that's probably what the analysts were referring to. But this was what changed my mind a couple of years ago, or a year and a half ago, on Nvidia. Was Jensen had a plan outside of the GPUs, and what I was the edge computing stuff and their CPU, where they're and the growth in the CPU part now,
LPUs now,
and everything with the U. The circular financing things it all seems to be built on IOUs, but it's a much more well-rounded business than just it's selling one product now. So long term, I'm much more confident buying Nvidia long term.
10 stocks picked by you, 2 experts, 1 hour.
Let's get to the companies that have been nominated by you.
It's like a witch hunt over there. Everyone hates data centers.
Just remember that most of their earnings are offshore, so there's no franking credits.
The call is brought to you by Centuria, an ASX-listed property fund manager with $21 billion in assets under management. Want to diversify beyond equities? Explore the Centuria Sydney CBD Prime Office Fund at centuria.com.au.
Well, let's have a look at some of the market leaders and laggards in today's session, and GYG rising on that broker upgrade to outperform. Ageo also had a good day. James Hardie coming back after being sold off in the wake of its results, and DroneShield and Judo Bank also looked good. To the downside today, Predictive Discovery was off by about 4.3%, and REA Group was down 3.3%. Let's have a look in the small end of town, and you saw Comet Ridge there up by some 24%, while the laggards in the small end of town, included Encounter Resources, which was down by almost 11% today. So having a look at what we are expecting tonight, in fact, we might take that down. I do believe we've actually got weekly jobless claims coming through, housing starts for April, PMIs for April as well, and the Philadelphia Fed Manufacturing Index for May, while earnings include Walmart, Deere, Workday and Ralph Lauren. Have we got what's coming up tomorrow? No, we don't. But I do believe there is a little bit of data coming through out of Japan, and then maybe an AGM or two. I'm rutching my brain at 16:15 in the afternoon, but it's a Friday, so not too much. I'll tell you what we do have going on ausbiz tomorrow, and that is quite a few really interesting interviews, including with the guys from Magenta Advisory. We're also going to catch up with Judith Viander from the Philanthropic Services Association, seeing what you can do to sort of maximise your contributions to philanthropy ahead of the end of the financial year. It is a very good session there on the local market. We finished higher by 1.5%. The S&P ASX 200 up 125 points or 1.5% to 8,621 points. All right, we'll see you bright and early from 9:45 a.m. tomorrow. Catch you then.